This is Nightly Business Report with Bill Griffith and Sue Herrera.
Wall Street angst. The Dow falls below 23,000 as investors find a number of reasons to sell stocks.
Spending standoff. The president demands money for his border wall, raising the possibility of a partial government shutdown.
Just do it, and that is what Nike did, running past Wall Street's earnings estimates, even as it faces a number of global challenges. Those stories and much more tonight on Nightly Business Report for this Thursday, December 20th.
And we do bid you a good evening, everybody, and welcome. Wall Street was once again rocked today, with equities, big and small, experiencing another substantial sell-off. And the NASDAQ, that very same index that powered the bull market higher the past decade, is now flirting with the bear. After today's decline, it has now fallen almost 20% from its most recent high. And right now, the overall market is on pace for its worst December since the Great Depression, 1931. Let's get to the numbers for this Thursday. The Dow average plunged 464 points. It was down more than 600 points for a time today. As Sue mentioned, we're below 23,000 now. The NASDAQ dropped by 108. The S&P fell by 39. So investors are clearly still uneasy, and it appears that the wave of selling is coming from a number of fronts, which we will be exploring this evening. Bob Pisani starts us off from the New York Stock Exchange.
The markets continued to throw a temper tantrum today. Those stocks did manage to end off the session lows. The Dow had plummeted more than 670 points at its worst. The Federal Reserve meeting yesterday was the last major market catalyst scheduled for 2018, but the market's grappling with a whole host of key issues, including mixed news on tariffs and trade war uncertainty, Brexit concerns, and a global economic slowdown. The problem is no one's sure how bad this slowdown is. So these are all old issues for the market. They've been coping with them for a few months now. But now there's two new issues floating around. So we have the Fed with a somewhat less than friendly tone on rate hikes for 2019, and now a looming government shutdown over spending and border wall security. There's been no real reward for buying on the dips lately. Have you noticed that? There may not be until the start of next year. Where's the buyers? Retail investors are frozen, hedge funds are all in redemption, and companies are still doing buybacks. That's good news, but there's a limit to how much they can do. The markets have taken on a life of their own, and there's a lot of strange technical pressure. We've seen new lows in the S&P, crude sinking to 15-month lows, and a lot of internals are really extreme. For example, more than 1,200 stocks hit new lows at the New York Stock Exchange today. We haven't seen that in more than a decade. The question is, will anything end this buyer's strike? For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Investors spent another day digesting what the Federal Reserve said yesterday about the economy and the path of interest rates. But what exactly is confusing investors? Is it the central bank's communication or its policies? Steve Leisman dives into that one.
The market has sent a clear message to the Fed. What it's selling about the need for tighter monetary policy, the market isn't buying. It's rare to have such a divergence between the markets and the Fed, raising the question, does Fed Chairman Jerome Powell have the market's trust? Highlighting the problem, the market has sold off hard even after Powell insisted the Fed's forecast to raise rates twice next year depends entirely on whether the economy is strong enough. The market seemed to hear the Fed is hiking no matter what. Many in the market said they wanted the Fed chairman to say he would ease off plans to reduce the Fed's balance sheet, but Powell said that plan is on autopilot, sticking to a script that dates back to Fed Chair Janet Yellen.
The bottom line is that I didn't see what the risk was for the Fed to just say, we'll wait till the next meeting or the next couple of meetings and we'll wait and see how things are going to play out. They've already raised rates 3 times this year. And in fact, when you look at the cumulative tightening the Fed has put into the system, including the balance sheet, basis point for basis point, it's 325 basis points of tightening they've already put into the system. And we haven't seen that hit the broad economy yet.
To be sure, some applauded Powell's move, specifically for not knuckling under the pressure from the markets.
Powell seems to me a very level-headed man who's doing his job. He's not intimidated. And we've had very low federal funds rates. They've been negative for years. It's about the time that they come up to 0 or something like that when the economy is showing signs of strength. So I'm impressed with what he's doing, and it seems to me shouldn't stir the markets a whole lot.
But part of the problem is the Powell Fed seems to have trouble managing expectations. Investors clearly wanted a more dovish message than Powell ever intended to deliver. And markets hate to be surprised by the Fed undermining trust. The good news? The market and the Fed parted ways in 2013 with a taper tantrum. The Fed regrouped and regained the market's confidence. But it was rough sledding then, as it is now, with markets and the Fed not on the same page. For Nightly Business Report, I'm Steve Leisman.
Meanwhile, the odds of a partial government shutdown are a lot higher tonight than they were yesterday. The president today switched course and said he will not sign a spending bill that does not include funding for a border wall.
I am asking Congress to defend the border of our nation for a tiny fraction of the cost. Essential to border security is a powerful physical barrier. Walls work, whether we like it or not.
Well, that threw lawmakers a curveball just ahead of tomorrow night's deadline. Ilan Mui is on Capitol Hill for us tonight, and we all know that the Senate voted a bill last night, passed one without the border wall funding, so it falls to the House to get something done, and they've canceled all their plans for today otherwise. So where do we stand tonight?
Yeah, so things are really in flux here on Capitol Hill. Whether or not to include money for the border wall in a short-term spending bill that would keep the government open through February 8th, that is a fundamental disagreement between Republicans and Democrats. Republicans believe that this is something that's very important to their base. They feel it's a campaign promise that they want to deliver on. They want to have the opportunity to vote on it. Democrats, however, they remain united in their opposition against this wall. They say it's no way that they're going to ever vote for it. There's no way they're going to provide their support for it. So we appear to be at an impasse. And when both sides are hardening their positions and sort of digging their feet in the ground, that means that compromise becomes that much more difficult here on Capitol Hill.
And since we find ourselves in that situation, let's go through how much of the government would be affected if a shutdown happens, because it's not all departments.
That's right. So this would be a partial government shutdown. Both chambers have already passed bills to fund about 75% of the government, but some key agencies would remain unfunded, and that includes the Treasury Department, the IRS, the Small Business Administration, definitely some agencies that are very important to the business community, to investors as well. And you also have to remember that this is really important to the federal workers who are employed at those agencies. They're facing the possibility of not getting paid during the Christmas season, so it looks like the holidays may not be very merry for them.
All right, Ilan, thank you. A lot going on, and we'll let you get back to that. Ilan Mui there for us on Capitol Hill. And adding to the news out of Washington, very late today, we learned the Defense Secretary James Mattis will retire at the end of February.
On this tough day for the markets, let's take a closer look at what drove the sell-off and what's being said among the traders on the floor of the NYSE. We're joined tonight by Keith Bliss, Senior Vice President at Catone & Company. Keith, it's always nice to have you with us. Thanks so much.
Yeah, my pleasure. Good to be with you.
So what was the feel down there, and what does your gut tell you about what's going on in this market, given the many years of experience you have trading it and covering it?
Well, I think one of the biggest problems we have is the breakage of the seasonal factors that we've been dealing with for years and years and years. I mean, it's been widely reported this is going to be the worst December since the Great Depression. And December, everybody needs to know, is usually the best month out of the year. So when you see that kind of breakage, you know something dramatic is happening inside of the marketplace. We started, of course, to see the signs in November, and then once we entered December, you know, all heck was breaking loose, so to speak. When you have the Russell 2000 down 13% in the month of December, that's a problem. So the mood on the floor is one of you know, defense. We're playing defense every time we walk in here, and it's tough not to do that when you walk in every day and all you see is red figures. You
know, the tendency, Keith, is for us to point to the day's news to try and come up with a reason for the selling. Yesterday it's the Fed. Today it's the continuing resolution in Washington that may force the government shutdown now. But you know, it feels to me like this is starting to just feed on itself. You have mutual funds and hedge funds and pension funds that want to get out of this market because it is going lower. So it starts to become a self-fulfilling prophecy. What do you think?
Yeah, it really does. Bill, you and I have talked about this many times when we've been on together over the years, and it does take on that. It does take on that front, and all it took was, you know, one match to really light the fire, and it appears that match was the trade dispute with China. And then once we start getting some selling pressure and things come in. And I have to say the confluence and the perfect storm of negative events that could impact the market, whether it's a messy Brexit exit, whether it's the global slowdown or the perception of a global slowdown, whether it's a, potentially not funding the government and the government shutdown, all of those factors start to feed in upon themselves. And then the market players, both the hedge funds, the mutual funds, and let's be clear here, also the algorithmic program traders out there, those things will trigger, and then it will just have a massive sell-off. So I can tell you, this past week, we saw sell-offs occur at almost 2 o'clock every day, and we could see them coming, and we saw that coming today, and I dare say we may see that tomorrow. So what we thought, the feeling on the floor, what you were talking about before, is that I actually thought that we were going to have Dow down 1,000 points at that stage, and it's been the pattern that we've seen. So, Bill, you're right. It does become a self-fulfilling prophecy. Right. People feed on it. They just look for a reason to sell, and as Bob was saying in the lead-in to the show, in his piece, there is a buyer strike going on, especially when you consider we're December 20th.
All right, Keith Bliss, thank you so much, Keith. Appreciate it. Keith is with Catone & Company. Bill?
Well, it's being called a case of economic espionage. The Justice Department today charged Chinese hackers in a global scheme to steal secrets from corporations and governments. And America's allies are sending a message to China that this behavior has to stop. Eamon Javers is at the White House for tonight.
The United States Department of Justice today unsealing this indictment against 2 Chinese individuals that the Department of Justice says have been involved in a years-long scheme to steal secrets from America's top technology and defense companies. The 2 individuals are named Xu Ha and Sheng Shilong. The U.S. government says they worked with a private sector Chinese company in Tianjin, China, but they also worked at the behest of the Chinese Ministry of State Security and Intelligence Agency. The U.S. government ultimately asserting here in this unsealed indictment that they were involved in activities against a wide range of American companies, including companies in a number of sectors, including space and aviation, manufacturing, pharmaceuticals, oil and gas, communications, computer processing, and maritime technology. Rod Rosenstein, the Deputy Attorney General, said that the Chinese government is now on notice that the U.S. government knows that it's been stealing secrets.
Faced with the detailed factual allegations today and the corroborating statements not just from the United States, but from other victimized nations, China will find it difficult to pretend that it is not responsible for these actions.
It's not clear when the 2 accused Chinese officials might ever see the inside of a courtroom because the Chinese government is not expected to extradite them. But today's indictments come alongside a global push by the United States and its allies to issue statements naming this particular attacker as coming from China, trying to put political pressure on the Chinese to knock it off. For Nightly Business Report, I'm Eamon Javers at the White House.
It is time to take a look at some of today's upgrades and downgrades. Humana was upgraded to overweight from neutral at JP Morgan. The analyst cites a number of factors, including Humana's recent market share gains and its Medicare Advantage exposure. The price target is $333. The shares fell more than 1.5% to $278.09. The paint maker PPG was upgraded to outperform from sector perform at RBC Capital Markets. The firm cites more favorable raw materials pricing. The price target is $121. The stock rose just a fraction to $97.07.
Still ahead, Nike's runaway quarter. The stakes were high for Nike today, and the company did not disappoint. After the bell, the Dow component turned in a strong quarter thanks to strong demand in its key North American market. Nike earned 52 cents a share. That was 6 cents better than estimates. Revenue rose by about 9% to more than $9 billion, and the stock took off in initial after-hours trading tonight. Sarah Eisen has more on Nike's results.
Wall Street may be worried about a global economic slowdown, but Nike is not feeling it. Across the board, beats for Nike on earnings and on sales. And if you look around the world, it's strong everywhere. Greater China, an important growth driver for this company, saw sales gain 27% despite the trade fight between the U.S. and China escalating. North America, its home market, and just recently turned around, grew 7%, better than analysts were expecting. Even Europe, which is seeing a slowdown in economic growth, saw 11% growth and 15% for emerging markets. Add it all up, and for a company that gets 60% of its revenues overseas, there was a lot of hand-wringing from investors about the impact of a strong dollar and global weakness. Still, Nike managed to beat expectations on the strength of new innovations like VaporMax, which is speaking to consumers despite the tough economic environment. For Nightly Business Report, I'm Sarah Eisen.
So let's talk more now about the key takeaways from Nike's quarter and whether the momentum at the sneaker maker company can continue. We're joined for that by Brian Nagel, Managing Director and Senior Analyst at Oppenheimer. He has an outperform rating on the stock with a $90 price target. Good to see you again, Brian.
Nice seeing you too.
It would look like pretty much across all sectors a really solid report.
Very solid. I mean, I would go so far as to say this was a stellar report from Nike. And it's like, just like you said in your intro, across almost all metrics, we saw real strength here from obviously from a sales perspective, but then also gross margins, which tells me they're selling a lot of full price product, not much discounting happening here.
Any worries? What about the trade situation? I mean, China's a big play for them, as Sarah was pointing about. What about the currency translations? I mean, any of that worry you at some point?
No, look, I'm going to answer that this way. As I'm talking to my clients every day right now, we're all talking about or discussing or handicapping the potential for some economic slowdown here in the United States and broadly. But, this is the most recent data point for me, Nike, just a couple hours ago. We're simply not seeing it. This is a company that sells now high-priced, discretionary-type items. And sales continue to perform very well. In fact, my team, we were just on the conference call listening to what Nike was talking about, their guidance. They're telegraphing even better sales growth now through the year ended May 2019. So I think this is just one more indication from my vantage point that, again, the consumer economy, consumer demand is actually quite good here.
It's interesting also because they have competition from the so-called soft shoe category, like from Allbirds and some of these alternatives. But that doesn't seem to be hurting them, at least not yet.
No, I agree. And I've made this point before, and I'll make it again. I really think this emergence of these newer brands, like Allbirds is a great example, and there's others out there as well. I think those companies have made Nike stronger. And I see this throughout. I cover a number of larger retailers and brands, and there's competition like this everywhere. And what I'm basically saying now is that this has been, I think, the case over the last 1 to 2 years now, particularly, where these established brands like Nike have really woken up to this new competition and become even stronger. One of the big themes right now with Nike is everything they're doing digital. This is a digital company. It's largely a tech company. And that's allowing them to design better products quicker and probably most importantly, really connect directly with that consumer.
All right, Brian, thanks so much.
Thank you.
Appreciate it. Brian Nagel with Oppenheimer.
Walgreens wants to save $1 billion, and that is where we begin tonight's Market Focus. The Dow component said today it wants to cut annual costs by that much within 3 years. It also plans to invest in partnerships as a way to stay competitive. Meanwhile, Walgreens reported better than expected earnings in its most recent quarter and a rise in sales. However, the stock did fall 5% today to $69.61. BlackBerry reported better than expected earnings and revenue in its most recent quarter. The company cited its strategic shift into software, which is being used to develop things like driverless cars. As we know, BlackBerry was a smartphone pioneer, but lost out to Apple and Android devices. Shares rose more than 2% today, closing at $7.55. Packaged foods maker Conagra Brands reported weaker than expected revenue in its most recent quarter. The company says it was hurt by delayed shipments and weak demand for some of its grocery brands. Conagra also sold fewer products to restaurants and to caterers. That sent the stock down by more than 16% to $24.28.
Carnival issued a disappointing outlook amid higher fuel costs and currency fluctuations. Analysts say the weaker forecast could mean the world's largest cruise line is having a hard time raising fares. Carnival did top quarterly profit and revenue estimates, but investors focused on that guidance, sending the stock down 9% to $49.79. And investors are getting their first chance to react to a partnership between AB InBev and cannabis producer Tilray. Late yesterday, the two companies said they will jointly research non-alcoholic beverages containing marijuana ingredients, THC, and CBD. For now, the partnership is limited to Canada. Shares of Anheuser-Busch fell 1%, while Tilray gained 10%. Cigna closed its $54 billion deal to buy Express Scripts. That acquisition creates one of the biggest providers of pharmacy benefits and insurance plans in the country. The companies say the combination will help it cut costs. Shares of both companies fell. Cigna was off nearly 7%. Express Scripts was down more than 3%.
It goes without saying that it's been a tough year for Facebook, given a series of controversies about how it handles user data. Since the stock peaked in July, it's down 37%, erasing about $245 billion in market value as a result. And other costs are building as well. Julia Borston joins us tonight with that part of the story. So we've been reporting on the various controversies surrounding Facebook, from the lawsuits, possible regulations. What kind of costs are we talking about here, Julia?
Well, I think it's worth noting that the stock did hit an all-time high in July, and you mentioned the decline since then. But even if you look year to date, Bill, Facebook shares have lost about 24% year to date. And for Mark Zuckerberg, founder and CEO of Facebook, that means that his holdings of Facebook have declined in value by about $20 billion. And then there's the additional issue of fines that Facebook may be facing. Facebook was just sued by the Washington, D.C. Attorney General and for privacy violations. And if the Attorney General wins, then Facebook could face about $1.7 billion in fines for that issue. And then if Facebook is found in violation of its agreement with the Federal Trade Commission, that could be additional billions of dollars of fines.
Let's talk about the reputational risk and the hit that has had on Facebook. Can we measure that?
Well, it's hard to measure. The real question will be what we see when Facebook does its next earnings report, whether we see that the user base is stagnating or even declining. So it's too soon to actually get any hard numbers from Facebook on that. But it is notable that the NAACP, as well as other civil rights organizations, did call for a boycott this week because of Facebook's track record with data and privacy issues. And there have been calls on Twitter to delete Facebook. The top trending article on Twitter, when you search for Facebook on Twitter, was a New York Times article on how to go about deleting Facebook. So it'll be really interesting to see how this all impacts users.
Very quickly before you go, this is not lost on advertisers, is it?
Well, it's too soon to say what happens, especially with those big brand advertisers. The small and medium-sized businesses, though, they're less likely to leave Facebook because it's simply one of the best options they have out there. We'll see whether the big brands start to get concerned about brand safety issues.
Julia Borston in Los Angeles. Thanks, Julia.
Coming up, last-minute shopping push. Why procrastinators just might be in luck. The biggest American cigarette company has made official what we have been reporting. Altria is taking a stake in Juul, the e-cigarette company. The 35% stake is worth nearly $13 billion. This is Altria's latest move to look for growth beyond tobacco.
And for all of you holiday shopping procrastinators, and you know who you are, there's a way for you to skip long store lines and avoid those dreaded shipping fees. And retailers are hoping you take advantage of it. Courtney Reagan is in New York for us.
If you still have shopping to do before Christmas, you are not alone. About a quarter of Americans are still checking off their lists, but you are running short on time.
Only halfway done. Last minute. We actually came up from Philly to do shopping in New York.
I'm in the middle of actually going to the GameStop.
The deadline for non-expedited shipping in time for Christmas has passed for many websites, but buy online, pick up in store is an increasingly popular option for procrastinators. Online sales are up almost 18% so far this holiday season compared to last season, with buy online, pick up in store orders up 47% according to Adobe.
This is the first time in the past 3 years we've been measuring it where we saw actual performance increase for all retailers. This year's top 5 for buy online, pick up in store in our study were Bed Bath & Beyond, Best Buy, Kohl's, Target, and the Home Depot.
During the year, about half of all Target.com orders are picked up at stores. But in the final days before Christmas, it surges to around 80%. The retailer expects the holiday season order pickup volume to be 3 times last year's levels. Dick's Sporting Goods also expects the percentage of online orders in-store pickup will triple as it gets closer to Christmas.
Old Navy says it's breaking records with the amount of buy online pickup in-store orders this holiday season. Most of those orders are ready in 2 hours, and up to a quarter of shoppers end up buying something else when they come in to pick up the online order, something other retailers are seeing as well.
I forgot what I'd bought 6 months ago, and I keep buying more on top of that.
I do online, and then I go into shops or whatever, but I'm hoping to be done by Friday.
Kohl's has designated parking spots for those order pickups. Target is offering Drive Up, where an employee brings the order to your car. And this Saturday, Old Navy is giving free round-trip Lyft rides to and from the store to pick up those online orders. But those fast click-and-collect orders are filled using store inventory. So the closer it gets to Christmas, the riskier it gets to find what you're looking for. For Nightly Business Report, I'm Courtney Reagan in New York City.
And before we go, here's another look at the day on Wall Street. It was not pretty. The Dow plunged 464 points, the Nasdaq dropped 108, and the S&P 500 fell 39. Welcome back, by the way.
Thank you. It's nice
great
to
have you back.
Nice to have a voice again.
I know. That'll do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.